Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Thursday, April 9, 2015. Inside the numbers tonight, we're going to take a look at the SPY and the EMini contract. We'll give you all the numbers and support and resistant lines that I have. Same goes for crude oil, gold, and we'll look at the GDX as well. Interest rates in the bond market, and we'll look at the US dollar. Let's get into it. So let me get over to the SPY chart, and I have a new line in the oil chart that you just saw. So we'll get back to that in a second. So let's go to the daily chart. All right. So here's what we've got. Interesting day. In fact, it was really, really whippy and choppy intraday here. Let's actually go back to the intraday. Look at this. So we're down. We're up. This is yesterday. We're down. We're up. I mean, this isn't indicative of a market, okay, that has a larger directional move in the ready, all right? Which way? Obviously, you want to know which way. Well, we'll get there in a second. But the type of activity that's been going on pretty much all week is very, very reminiscent of when a market is going to break large in one direction or another. And large is, it's all in the eye of the beholder. It's maybe not 200 S&P points, but it's not 10 or 20 either. Okay, so where are we? Well, remember I said that this pivot high here at 109.30, what is it? 209.35. 209.35 is formidable resistance. Today, your high was 209.18. But here's the deal. So let's go back to the intraday for a second, because you've heard me say a number of times it's how they close them. So look how they closed them today, ramped up, and this is how they closed them. Forget about this little red candle at the end of the day. That's nonsense. This is how they closed them. They rallied them up into the close this afternoon. That's a strong close. So that's one clue that the market wants to move higher. What else do we have? Well, if you don't mind, I'm going to go over to the EMini contract because I have hard numbers in the EMini contract of where we go. So let's go back to the daily. And sorry to jump around on you a little bit tonight. So first we have to get through this area here. And on the EMini contract, that's 2089.25. Okay, once we do, the next level or stopping point is not that far away, which is basically 2095. Okay, and I think that comes tomorrow, worst case Monday. Okay, and I told you yesterday and or the day before that 2095 was coming this week. Okay, so it's always going to be plus or minus a day, and I had the number or the day of Friday, so it's Friday or Monday, but it's 2095. Okay, and if we begin to close hourly and certainly daily above 2095, okay, then the next level is 2115, okay? So that could be, and it could be higher too, but that's all I have right now. There is a 2135 that I've been telling you about since last October, but, and that'll eventually get hit. Remember, this market is bullish, okay? Remember, higher prices are coming. Okay, even when the market's down for a couple of days, 3-4 days in a row, I'm still telling you it's a buying opportunity. Higher prices are coming. We're seeing it right in your face. Higher prices are coming, okay? This is the wall of worry. Nobody wants to believe it. So 2095, close hourly above 2095, it's 2115, and then beyond that it's 2135, but we're not there yet. Okay, so what about the downside? What happens if the larger move is in the other direction? Well, then really we go down to this double bottom here, 2030, 2032, 33, in that neighborhood all throughout here. But if that doesn't hold, and I suspect if we go down there one more time, it's not going to hold. And if that doesn't hold, okay, then you probably have another 90 to 100 S&P points beyond that down to this area here, okay? So it would be down to 1930, 1940, 1950 maybe, in that neighborhood, okay? This is the neighborhood, all right? We don't really want to be in that neighborhood right now. We would rather be in this neighborhood up here. So remember what I was telling you, right? Patterns. We had maybe an A or an A, a B, and a C pattern, right? And that's kind of where we are right now. We'll see. I mean, this is, let's zoom out for 1 second here, and then we'll move on to other markets. This is bullish, right? What about this chart is not bullish? So I know that there's a lot of folks out there that like to play short, believe the market has to go down, believe the Fed is all this and all that. I understand all that. I'm with you. This is not normal behavior for the way the market should be. But who cares how the market should be? It's how the market is, and we trade the market that is. And what is right now is bullish. Okay, a couple things. So I have an important turn, which is really scheduled for tomorrow, but that could be that 2094.95. And a turn doesn't have to mean down, a turn doesn't have to mean up, and a turn could have come today. It could have come a day early. So we'll just ignore that for now. Looking at my notes here, we also have another important day on April 16th, which is next, I think Tuesday or Wednesday, Thursday. It's Thursday. It's next Thursday is supposed to be another important day, and we'll talk more about that as we get closer. But right now, that's pretty much what I have in the S&P. I mean, you get the picture. We're bullish. If the market turns down, you know where the support levels are. You know if they're broken. You know what the next levels are. On the upside, basically, what I'm saying is that if we firm up and close above 2095, you're going to pierce through double top. That's what I'm saying. It's not that it's not rocket science. And by the way, remember yesterday I mentioned that the market would find support at 2065.66 if it went down this morning, right? What's the low here? What was the low? 2066.75. It's funny how that works, isn't it? All right, so let's take a peek at the FXI. And the reason I want to look at the FXI is because I want to talk a little bit about China. And there's a lot of hype about the Chinese stocks and the Chinese stock market, and it's been on a tear. And look at this parabolic move. This is ridiculous. And we see this from time to time. And whenever we see this, the media goes into a frenzy, and everybody gets all giddy about the market, and they all have all the reasons why it's going to keep going forever and all that stuff. And we know the real story. The real story is nothing goes in a straight line, and obviously stuff can go a lot farther than we ever think it can. It happens time and time again. It happens with stocks. It happens with markets. It happens with other markets like currencies and everything. So this is one of those cases. But remember what I always say, just to bring this back to reality. Markets stay close to home. The 20-period moving average is home base. You've heard me say that a number of times. Okay, just look how far away we get from the 20-period moving average before we have to go back to visit home. Okay, here we get a couple of dollars above, back to home. Okay, above, back to home. Below, back to home. This time, we are significantly above home base. Now, granted, home base is on the run, right? Home base is in an uptrend as the 50-period moving average is also because of the strength of this market. But it's still going to have to come back to home. I mean, it's not going to just run away forever. So some folks want to know, where's the top end of the when's it going to turn down and all that stuff. So here's the way it works. Most likely, at worst case, there's about another $1.50 or so of upside in the FXI. Okay, so that's just to give you a rough sketch of how much upside is left here for now. Okay. And normally what will happen with a market like this, because it's China and it trades while we're sleeping here in the U.S. East Coast time, okay, or all over the U.S., what happens is you'll wake up one morning and it'll be down 4, 5, 6%. The market will, the Chinese market. And that'll be the start of the correction. And the correction in this case, let's just say we get up to 52, 52.5. Okay, the correction, okay, in very, very rapid fashion will come right to 48.5 in like a split second, okay? And then from there, you can come all the way into 46.5, 47, but right away, you'll come down $2.50, $3 in a flash, okay? That's just the way it works. That's the way these things work. I've been doing this for 25 years. I've seen it time and time again. So that's just a snapshot. I know a lot of folks are interested in Chinese stocks, so I just thought I'd slip that in, and now we'll get back to the regularly scheduled program. The gold market is not acting as it should. Now, we closed below the 1197, 1198. I told you I didn't want to see it close below. So now I am, not that I'm not expecting more upside, I am. It just, in my book, and the way I read markets and the way my indicators are and the calculations I do, tell me that the probabilities of higher prices become less likely the lower we go. It's just that simple. So at this point, I have to believe that we'll probably come into this 20 period moving average here. And if this doesn't hold, I'm out. And that's the bottom line. So there's your line in the sand. 1187, close below 1187, depending on where this is tomorrow, give or take $1 or so. Close below this 20 period moving average, which would also be, in my book, a close below this for sure, and I'm out. And that number is 1180. So a close below 1180, and I'm gone, and I'll just take a small gain because I'm in from over here again. I'll just take a small gain, and then and we'll reassess later, because if it doesn't rally soon, and I know I've been saying that for a couple of days, then something else is developing. And the energy that I was expecting on the upside to take us through the 200 period moving average, if that doesn't happen and we invert, then it happens on the downside and we go down to double bottom, and I don't want to be there to participate. All right, so that's where we are in gold. GDX is really the same story. I mean, if you want to talk about GDX, it's no different. If gold goes, GDX goes. Which way it goes GDX, and that's that simple. So I don't really need to review numbers in there. You know the story. Here's your line in the sand if you're long, and if this breaks, it's double bottom or potentially worse. And if the market cracks and gold cracks at the same time, GDX gets a double whammy on the downside. So just know your risk there. It's almost like one of those double two-time ETFs, because it has two components to it, a market component and a gold component. So just realize what you're trading there. Okay, let's go over to the crude oil market. Interesting stuff in crude oil. 51's the number. It's pretty simple stuff, okay? And basically, I got to straighten this out. There's a reason I have this line in there. Let me just straighten it out. That bothers me. Okay. So 51's the number. In fact, let's go over there now. I've got it on the hourly chart, and here's what it is. This line is 51, and the reason I drew it in is because I want you to see how the market fights 51. Okay? We come down to 51, below it, fight back to it, underneath 51 for a few hours, above 51, test it, break above 51, close above 51 hourly basis, and we go. And then we realize, oh no, we're failing, back to 51, below 51, back above 51, try it again, fail, and below. So you can see how important 51 is. That is the number, okay? This line is the number. I didn't make that up. That was the pivot today, and it'll be the pivot tomorrow as well. So if we close hourly above 51, it's bullish. Below 51, hourly close is bearish. And the daily close today below 51, in my mind, was bearish also. So that's where we are in crude oil. There's not a lot else going on there. You know the story. If you want to look at the daily chart, top end of the range, we're basically at the underside of the channel that we had drawn in from before. But, you know, this isn't really a channel anymore since we spent so much time down here. It's just, I'll call this the top end of the range, and we'll just play, you know, well, why don't we just call it what it is? All right, here's a new bottom of the channel. All right, that's rough, but I'll fix it later. So the bottom of the channel is, I hate when that happens. The bottom of the channel, and here it comes again. So I'll fix it later. The bottom of the channel is down in this area, which is right around 44.50. Okay, so let's just do it. Let's just call it 44.50. 44.50. Okay, and there's your bottom of the new channel, and there's our new channel. Okay, so now we're in the middle of the channel, and in the middle of the channel is 51, and 51 is going to be our pivot point for at least tomorrow, and beyond that, we'll talk about it again tomorrow night. All right, let's go to the bond market. And the bond market, we were having a daily bottom, and it worked for a day, and then the bond market rolled over. So this is the bottom. Let me look at TLT. It's easier for everybody to see TLT. So let me go to the daily, all right? And what happened was we had that one-day bounce, and then we rolled over today, and the same, like I said before, with the gold market, the same energy that was supposed to take the bonds up a little bit, up to 132, 133, is now taking them down, and I think there's lower prices ahead, and I wouldn't be surprised to see the TLT down in this area tomorrow. 128 tomorrow is probably in the cards. So higher yields are coming, and just so you know, if we have higher stock prices, okay, and higher yields at the same time, that's generally positive for the financial sector. So you want to take a look at banks that are rallying, because you'll get extra beta or extra upside in a market rally in the financials, namely the bank stocks. So you look at JP Morgan Chase, you look at the Bank of Americas, and you know we have a swing trade on Bank of America. You look at the Wells Fargo's, which was a little bit weaker today. You look at Goldman Sachs and some of the others, and they'll typically catch a better bid than the market if interest rates are up at the same time the market is up. So there's just a little trading tip for you. Okay, dollar. Let's take a look at the dollar. Dollar is just very, very strong. It's just not giving me the zone. I want it in the zone. It's not coming into the zone. It's running away. So, is it going to pull back? Yeah, of course it'll pull back. Now, I'm probably going to stop looking at this zone as much as I am going to look for another setup where I can get long the dollar. I just can't hop on here. It's just not in my nature. But I'm going to look for another setup, and that's just the way it is. If we get a runaway, and then I just miss the trade. If it just goes up from here without me, it goes up without me. What can you do? There's another trade tomorrow. There's always another trade around the corner. Each and every day there are trades. I'm going to circle back to one thing that I wanted to make mention of because I forgot. The IWM. Check this out. So almost day by day, the IWM is an opposite position of the S&P. One day the S&P is weak, the IWM is strong, like yesterday. Today, the S&P is stronger than the IWM, which is weaker, and that's just interesting to me because we're flip-flopping, and these are all those signs, like I said in the beginning of this video, about how the market, these are all indicators, all this activity is indicative of a market that wants to make a bigger move in one direction or the other. I'm not saying exactly what that is. I'm biased to the bullish side right now, as you know, but anything goes. And now watch this. You see this big down day here? The top of this day, the top of this big red candle, there's that pop-up again. The top of this candle is 125.60. Okay, so until you can close above 125.60, this is in a weaker position, the IWM. So that's something else you want to take notice of. So tomorrow, let's say we jump over and close above it tomorrow, that's fine. If we trade down again tomorrow and the S&P doesn't close above 2095, then I would suggest that the market may be in a weaker position, but we'll talk more about it tomorrow night if it happens. But I just wanted to bring your attention to it. It's interesting information nonetheless. This is in a weaker position, and the market is in a bullish position in terms of the S&P. Very interesting stuff. Okay, I'm long-winded tonight. I know it. I'm David Frost, mystrategicforecast.com. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.